Right, YouTube, we're back this time with another video. We're going to be doing another technical analysis video. I did do a playlist specifically for these type of trading strategy videos. I titled it The Best Trading Strategy. I'm going to be talking about the 5 EMA and the 12 EMA combination and the 34 and the 50 EMA combination. The first video is already up. I'm going to put it separately on that playlist so you could actually check it out. Each example I'm going to be uploading is going to be right there specifically. You should be able to see it on my channel if you go to that part of the playlist sections, and you will be able to see that specific playlist. So I titled it The Best Trading Strategy because it works very, very well. And the first example was a 19% example trade. Going to be going to this one, which was a 4.30% example trade. Now, if you compound these trades and you separate a specific amount that you want to just actually compound for this type of trades, it's going to be compounding and compounding, and you'll realize if you reinvest that amount, how much it's going to compound around time. That's the important thing when it comes to the strategy as well. So yes, this is actually showing contracts. You could do this with shares as well. It's going to be slower, but if you're scalping shares, you could do that as well. Now, when it comes to this, of course, I'm doing this ticker, which I've shown before, because it's a very popular ticker, right? So when it comes to this overall, this second example is actually going to be for puts. If I'm not mistaken, the first example was for calls when it was a 19%. This one is going to be for actually the other side of the trade. So when it comes to this, I have labeled my 5 and 12 EMA right here as light blue for the 5 EMA. The 12 EMA is actually as orange. You can see it right here. It highlights it on the desktop app of Webull. So the 12 EMA right here and the 5 EMA right here. And these are acting as resistance. So you know the trend is downward, right? 34 and 50 candles are below, so you know the trend is downward as well. So the best side for you to trade in this example, remember this is educational as well. In this example, it's going to be downward, not upward, because you're not over these very important EMAs that act as support and resistance when it comes to the 34 and the 50. The 5 and the 12 right here, they carry the candles. 34 and 50 act as either resistance or support. 34 in this case is the blue one, the dark blue one, as you can see. The 50 is this green one, light green one, like a lime green. So that's going to be this example. Since 34 and 50 is under, trending downwards, you know this is acting as resistance when it meets it. So you know this is a downward trade better. And what we're using also, what I'm utilizing would be the correct term to say is the DMI, because the DMI helps you actually know what is the strength of the trend. So in that case, even in pre-market for the 5 minute, you start to see, okay, there's no trend, it's choppy, because when the DI plus, which is right here, and the DI minus, these are both the DI minus and the DI plus. As you can see right before open, both are under 25. That means there's no strong trend yet, but you can use this reference also. I use this reference also, should be a better way to put it, the EMAs. So I see the candles are under them. So it's trending downwards on pre-market, even though there's no actual strength. DI minus is still at 18. But right at the first candle, I see it keeps rejecting. And what happens right here? 9:30, what happens right here? DI minus is at 37, well over 24. So that means what? Downtrend is in control. Bears are in control. Even here, this candle, when it closes green, but it closes where? It closes under the 5 EMA and the 12 EMA. So it's still closing under. And you see that still is the trend and the strength, because the DI minus right here is at the 30s, which is well over 24. So it means it's in control. And the 80X, which shows you what is the strength of that DI minus. If it's over 24, it means it's very, very strongly in control. And it's at 44. So you see this is a strong trend down because it shows you 38, the DI minus is fully in control. DI plus is only at 2. Has nothing to do with it. Since it's over 25, the DI minus is in control at 38, ADX is at 44, so the strength is very, very strong because it's over 24 and it's carrying it downward. So since it's carrying it downward, if you see any type of slight move up and it gets rejected like it does here, and you already see the stock RSI indicator over here up with the DI minus still at the 30s in control, that means this is a weak counter rally. This weak slight movement is weak, and this is where I would enter. Put, for example, if I'm trying to quote unquote short. So given the fact that it's weak right here because it got rejected right at these EMA clouds, it's not going over it. What happens? We go down, 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 down heavy right here. I mean, it goes down the stock is what I'm trying to say. But if you enter the contracts, you're up because you played puts because you're aware that the DMI indicator is telling you the strength is not for bulls. So this is weak. The strength is not for bulls. The strength is for bears. DI minus is over 24. And just like that, it tells you it. From here, it tells you it. DI minus is at 30 right there. And you see ADX is at 79. So that's incredibly strong. And that's exactly what happens because then it keeps just getting rejected every single time. Doesn't matter the green candles, it keeps getting rejected. And the stock RSI was already high on this rejection. So what more high could it have gone when you already have the DMI telling you this is weak for bulls, it's very strong for bears on this 5 minute. I'm using a 5 minute on this example. So it just keeps going down right there. That's a clear example right there. I'm going to show it with image. I did sell early. It would have ran in the money because it was a 12.5. I tend to pick 2 weeks out, a week and a half out to give myself time, and one out of the money. Just one out of, not very far out, just one out. So had I just waited, it would have gone in the money on this example because it went lower than 12.5. And this is a put, remember. And as you can see, this went to 12.19. But had I waited, even here, had I waited, it would have gone in the money. But still, 4.30%. The important thing is to get gains. So don't get greedy at any point in time. And that's the example I wanted to show. I had a screenshot at that point in time when it hadn't finished doing the other part because at that point I was out of the trade. You can see the rejections here that I was talking about. You see the DI in control, well over control, DI minus, which is for bears, and the rejections from the EMA just kept happening. So that's how you know. The perfect entry would have been here for here, and that's how you know this is a good trade. EMA's 5 and 12 combination to carry the candles and act as resistance and support for an entry. 34 and 50 as resistance and support. Very, very important to have both of them. That's how you know what you're doing. And if you're not trading against the actual trend, which is not beneficial because it might go wrong for you. It might go wrong for me. So for that example, DI minus is in control. Rejections, EMA clouds help you also. It helped me also. And the stock RSI already trending down, already high enough, and right with the rejection from the EMAs and with the DI telling me that it's trending downward, that bears are in control. I mean, this is free, completely free. You don't need a paid Discord. It is what it is. Peace.